Hello, this is Paul Cramey. Today's topic that we're going to be covering is the process of entering companies into the control database and then adding contacts within that company as well. So I'm going to switch over to the control so we can begin. Okay, to create a new company. Again, from the navigator screen, you can do so by selecting new company, or you can come up to the taskbar over here on the top left and say, I want to create a company. Now, we're not actually going to create, I'm just going to walk through the various fields by section by section. So we'll start up here at the top. This I'm going to refer to as section 1. Second section will be company. Third section will be contacts. And then the fourth section that we'll spend some time on is the financial section. So first and foremost, when you see fields that have a yellow background, that represents a mandatory field. And you can't save whatever it is that you're working on without having entered something into that field. So if you're going to add a company, you just start typing whatever name it is that you want. So let's say that it's I'm just going to enter June, okay? Now, this checkbox right here that says check name, that might be helpful because it will simply tell you whether or not there is already a company by that name, okay? So I'm just going to leave that there, and then we're going to walk across and talk about these other fields and other check marks. So the pricing level, think of standard pricing is it's going to calculate the price and 100% represents the standard price. The pricing level gives you the means of pricing above the standard level by a percentage, 5%, 10%, or pricing below the standard level, which would be at 90% or at 85%. So its ability to price at the standard level by just leaving it alone, that's the default, or defining or using some that may already be predefined that would allow you to price above the standard level or below the standard level. So a typical example of maybe a below standard level pricing would be if you're working with a client that's a wholesaler, where you've agreed upon a percentage off of the standard price that you're going to grant. Now the pricing level applies to every line item in the estimate or in the order itself. So it's an across the board reduction or an across the board increase in the calculated price. A pricing level example above 100% might be in the case where you are providing additional value added services to this customer, maybe delivering their goods or things of that nature, where you're going to charge a modest premium. I used it as well when I had outside salespeople that I was going to be paying a commission to, and I would mark the price up to partially compensate for that added expense that I was going to incur with the commission. Promotion is, think of it. I like to think of it as a marketing related initiative. So standard really means that there isn't any kind of promotion involved. Now, a promotion can be for a fixed dollar value, like $25, or it can be a percentage, in this case, a percentage off of every line item in the estimate or in the order. But think of it in terms of that it's a marketing initiative versus a pricing level that is going to be involved for a specific customer for all things that you price for them, regardless of anything else that might be going on. Now, just to illustrate a little bit more about the promotion, I chose new to create a new one. This is where you would enter the name. You could put any kind of description in there that you want. This will show you eventually a list of the companies that are using this particular promotion. This is where you can say whether or not it's always going to be active and available for use, or if it's going to be available for use only during the month of January, the way this looks. So you could choose the start date and choose the end date where you want that promotion to be active. So if you did a promotion during the month of January, then you could, that would work. If you tried to do it in November or February or some other month, then it would not allow you to select that particular promotion. Down here at the very bottom, you can use the promotion mechanism where there's no impact whatsoever on the price of what it is that you're producing. Yes, you're just using it for tracking purposes only. If it's going to be a percentage off, you would put a check mark there and then put in the percentage that you want to be applied. So in this case, it would reduce it by 15%, effectively giving the pricing at 85% level. If you were going to price it on as a fixed dollar value, you would put in the $30 after you've checked the fixed discount, and then you would choose an expense account that would be appropriate for that particular initiative. So again, name it, give it a description. This will pre-populate after you start to use the promotion. Give the dates that if it's going to be a short term or always, and then the type of the discount that you're creating or promotion that you're giving. Now, I'll be the first one to admit that a lot of there's interchangeable use between pricing level and promotion, but I encourage you to think of promotion as a marketing related initiative. Pricing plan is a little bit more complex. I'm just going to briefly describe how it works and how it can be helpful to you. There will be situations where you have a certain customer that's going to order things on a regular basis. Maybe you're going to be producing a lot of banners or some other product for them on an ongoing basis, and you need to be able to price that product or products differently than how that product is going to work for other customers. So if that's the case, then what you would do is create a pricing plan. The first step is simply to give that plan a name. Then as a second step, you would associate that pricing plan with a company. And as a third step, you would associate that pricing plan with a product, one or more products. And then you would have to adjust the pricing calculation process for that product and for that pricing plan so that it knows how it's supposed to function when the combination of the customer and the product is being chosen. There are other videos that are available that deal more extensively with pricing plan. It can be very, very powerful in certain situations, but certainly not one that's necessary across the board. The check marks over here, just a quick comment on some of these. When you first add a customer, they're going to be considered to be active. I'm sorry, considered to be a prospect, and they'll remain that way until you actually generate an order or an estimate, and then they're going to become an active customer. So they're a prospect, and then, I'm sorry, I didn't mean active. I meant it's going to be start as a prospect, and then they're going to become a client. Active, on the other hand, I need to clarify that, is active means that they are alive and well, you're doing business with them, and they're going to be available for you to choose to create a new estimate or to create new orders. If a company goes out of business or you're no longer doing business with them, then you would want to edit the company and remove the check mark. It's physically still in the control database, but no longer accessible to create orders. A company can be both a client and a vendor, or they can be a vendor only or a client only. Other things that are here, I'm not really going to comment on that. This is if they have a service contract, whether it's a person rather than a company, and so on. Now I'm going to switch gears. Now go to the company tab, and we'll talk about these fields that you see here. A company could be a standalone company, in which case the subsidiary doesn't apply. But if this company is affiliated with another company, then you can choose who that company is and say, okay. And now this company that I've labeled June is a subsidiary of this company called SeerSkills. Okay. It doesn't have any impact on creating estimates or in creating orders, but there are certain reports in the system that allow all of the companies that are a subsidiary of another company to be rolled together in those reports. Department location, if it's important, you can enter that here. I always encourage you to enter the company's website address. Every customer is going to be associated with a primary salesperson. This is the default as it's currently set up in Control, and that can be changed as a user option. I could have myself as the primary salesperson. Then these three items over here, particularly the first two, I really encourage you to always be diligent in entering them. What industry does this customer belong to? There's a list that already exists. You can choose from it. That list can be edited, changed, deleted, whatever you need to do, make it unique for yourself. But this is important, in my judgment, when it comes to marketing initiatives. There will be times that you want to do a marketing activity that might be related to people that are involved in their CPA firms or accounting firms or financial institutions, where you may want to do a marketing initiative to them. Ones that are in the advertising industry, you may want to do periodic marketing related initiatives to them. So I really encourage you to always capture the industry that company belongs to. The origin, excuse me, there are two different flavors of origin. This first one I refer to as the company origin. And by that, I mean, how did this customer come to you this very first time? So it's the first time that they've done business with you. And there is a predefined list. Maybe it was a cold call. Maybe it was a result of networking, and maybe they just walked in the door. Again, this is helpful from a marketing perspective. So I always encourage you to capture the origin, how they came to you. This list already exists. It can be added to or edited to suit your preferences. The region I've not really used before, so there's nothing that's pre-populated. You can create it and use it in a manner that might be helpful to you. Now, within company, you have billing address, shipping address, and the ability to have additional addresses for different purposes. The billing address is going to be used if you are mailing statements or mailing invoices. It's going to use the billing address. If the shipping address is, it's always going to assume that whatever you put in here for the billing address, it's always going to use the company billing address as the shipping address. But it's not uncommon that the shipping address may need to be different than the billing address. And if that's the case, you would choose shipping, come down here and say, I need to make a new company shipping address. And you would just simply fill in the fields that you need to make, for that company. There may be situations where you need to create a different for a different purpose. Might be a PO box. Okay, so you can add as many additional addresses as you need to. I'm going to try to remove this one. I'll delete it here. So again, the shipping address defaults to the same one that you enter for the billing address, but you can make it different if you need to do so. Okay. And then you can add additional ones if you need. If a company uses purchase orders, then you can put in the PO that they use and say that that is a required field. And then control will not allow you to save this particular company or save the order unless there's been a PO supplied. The tax class is a very, very important item to understand. It talks about tax classes. And what is meant by a tax class is that a tax class may be a single taxing entity like the state. It may be a combination of a state tax and a county tax. So it's the combination of the two. It may be a combination of three, or it may be a combination of more than three. So it's a combination. And my location refers to the location where your company is located, not the customer's company, but where your company is located. The system is going to assume that they're going to be subject to the tax class where your business, where the goods are produced. Some states have a different requirement, and that it reflects this with the location where the customer takes possession of the finished goods. So you need to make sure that you understand what those requirements are for your state. And then if you need to alter the tax class for this company, then you can choose from a list that these are just the default ones. And if you can add different tax classes, as many combinations as you need to. And if you added others, then they will appear in this list and you can choose whatever is appropriate. If the company is tax exempt, you can change that to non-taxable or taxable. I didn't comment on the actual address stuff. It's the street address, the postal zip code, the state, city, the state, and the zip or county, and the U.S. And then you can enter phone numbers to your heart's content. They can be office numbers, they can be mobile numbers, whatever the combination may be. Now, down here at the very, very bottom, this is available to use if you need to. So for flags, you can just add notes in general. So if your flag for this says, I don't want to accept checks from this customer, simply choose that. And this will always flash up on the screen when you're creating an order or an estimate for this customer that says, hey, don't accept checks from them. And you can add to this list of notes to your heart's content. You can edit existing ones. So here, this is the name of the note, and this is the text for the note. You can edit that and make changes to it, or you can create new notes, as many new notes as you may need to. Now I'm going to switch now to the contacts. Contacts, there can be as many, it has to be one, but there can be as many different contacts for a company as there needs to be. There's not a limit. But what is important is that you, at minimum, capture the last name. That's required, preferably the first name. Indicate whether that contact is active, meaning that they're still there. They're still going to be choosable when you're creating a new order or a new estimate. And if a contact leaves or is no longer employed there, leave it in the database, but simply remove the active check mark on the as an active contact, and that name will no longer show up as a person that can place an order. Now, every company has to have a primary contact, and every company has to have a billing contact. So at least one must be a primary, at least one must be billing. That can be the same person, which is what's being implied here. But if you've got a company, there might be 3, 4, 5, 10 different contacts within that company. One of those has to be the primary, and one of them has to be the billing. The primary, the meaning of that is that when you choose the company to create an estimate or create an order, the primary contact is going to be the one assumed to be placing the order. The billing contact, on the other hand, is going to be primarily intended for if you're sending statements or if you're emailing bills that need to go to the billing contact rather than the primary, then the billing contact could be a different person. And again, there can be as many in here as you need to have. I would encourage you to capture from the general standpoint, capture what their role may be, who their primary salesperson is. It's going to assume that it's going to be the company's primary contact, but it doesn't have to be. And you can make a change to that if you need to. Optional stuff, the billing, the birth date and stuff like that. I really encourage you to always capture the email of every contact. And I say that for a couple of reasons. One is for marketing purposes, and the other is to give you readily the ability to email estimates or orders to a company or to a contact for follow-up purposes. The phone number is going to assume that it's the company's phone number, but if it can be different, and if so, just put in the phone number, office number. That could be a cell phone, it could be a office direct phone, etc., and whether or not there's a fax. Just like the company, it's going to assume that the billing address is the same as the company's billing address. It's going to assume that the shipping is going to be the same as the company shipping address. But if the billing address is going to be different, you can change it by selecting billing and go down and say, I need to create a new contact billing address for this particular contact. Okay? So we've talked about the general, the shipping. This just pertains to carriers, if any, and any additional notes that you may want to add. That really exhausts the the primary ones here. I want to finish up by talking about the financial tab. Control is always going to assume that the customer is a cash customer. And what that means is that the expectation is that they're going to pay part or all of the order at the time that the order is placed, or at minimum when the order is delivered or picked up by the customer. In other words, you expect cash payment at the time of the order placement or at the order delivery or pickup. You will be asked about, do you offer terms? Well, the system can handle that. The two that are predefined are net 15 and net 30. I've seen net 45. I've seen net 60. So you can create whatever additional credit terms that you need. And the net 15 means that if the order was delivered and became a sale the 1st of January, for example, it's not considered past due until the 16th. It's a 15-day gap. If it's a net 30 and the order was delivered on the 1st of January, again, for example, it's not considered past due until February 1st, or 30 days. Okay. Take this payment terms seriously. It's vitally important from a financial standpoint to the health of your business. If you're going to grant terms, again, apply a credit account, give them permission to have a credit limit of a certain amount, $100, $200, $500. Use your discretion. And what that simply means is that if you have a $100 credit term, for example, and an order is being placed for $200, the system is going to prompt you that says, hey, this customer's credit limit is $100. Is it okay to proceed with the new order? And you can either answer yes or no. It's never going to prohibit you from placing the order, but it's going to require that you acknowledge that you've granted the permission to do that. If they have a $1,000 credit limit and they have outstanding orders of $1,100 and a new order comes across, it's again going to prompt you that says that their accounts receivable balance exceeds the limit, and is it okay to continue? And again, it's either a yes or it's a no. If I had the practice that I used a credit application form. So if someone asked for credit terms, I would give them my credit application form, require that they complete it and return it, and then I would make a judgment call on whether or not I wanted to give them the credit, and if so, for how much, and the date that I granted that permission. And then I used the control reports that would tell me when some were expiring, and I would require then on an annual basis, perhaps, that credit application be repeated. Again, I really encourage you to take this whole financial section very seriously and make sure that if you're granting payment terms, that it's done with the full insight of who the customer is and their credit and their credit worthiness. That concludes this topic. I hope that it's been helpful to you, and hope to have you watch another video in the near future. Take care. Have a great day.